Brian Sozzi laid all of this out in today's morning brief, how Nvidia may have set the bar too high for this earnings season, pointing to a recent note from Evercore ISI strategist Julian Emanuel saying, quote, the bar has been set high for second quarter of 2023 reporting season as blockbuster May 24th results from Nvidia have catalyzed upward earnings revisions for the growth-heavy NASDAQ. The chip giant set its second quarter revenue outlook at $11 billion. That was way above analyst expectations, remember, of $7 billion. And that news at the time sent the S&P 500 skyrocketing up over 7% in the last 3 months. And Soz is now
I think you said it perfectly, Julie. I'm nothing. What else do you have? What other tickets you want to talk about? But no, I think that is the gist of the Morning Brief newsletter, and it just hit our homepage this morning. I encourage everybody to check it out. But really, Nvidia shocked the heck out of the market on May 24th. I've been doing this for about 20 years. I never saw a type of guidance raise like we saw out of Nvidia, over $4 billion in upside in terms of revenue versus where the street was, a complete resetting of the bar. And I think what Julian here, a friend of our show, was just on a couple weeks ago, is arguing here is that more investors are thinking other companies are like Nvidia, and they're going to come out here and they're doing various things in AI, and they're going to see massive revenue upside. But hey, I mentioned in the brief, I went to Home Depot for a new barbecue brush over the weekend. They're not selling AI chips. Berkshire Hathaway not selling AI chips. And I think you look at the note out this morning from Goldman Sachs, the S&P 500 is still expected to see year-over-year earnings decline by 9%. Sales growth, there is not going to be any year-over-year sales growth for the S&P 500. That would be the first time that has happened in the past 10 quarters. So not every company is like Nvidia. Not everybody's selling AI chips, and I think that is very important to keep in mind.
At the same time, let's not pretend that earnings are actually going to decline by that amount.
Oh, you're going to strip them out? You want to?
No, they're always wrong.
Well, but still,
directionally, perhaps.
You're supposed to be big declines. You're looking at energy down maybe 50% year-over-year.
There were supposed to be big declines last quarter,
Materials down 27%.
There were supposed to be big declines last quarter. What happened to those?
Look, oil prices are about $73 a barrel. Energy companies, sure, maybe they don't hit a 50% year-over-year decline in earnings, but earnings are likely to drop. Even if they get a 25% drop, that is huge, and definitely not an Nvidia story.
Well, yes, likely to drop, but at what comparison? Are we comping year-over-year, or are we comping what companies have actually said? Because the executives themselves have had the tendency, at least historically, to sandbag some of those figures.
All I am saying with this newsletter here, guys, wow, talk about this pushback here on a Monday morning. Nvidia is not the normal company. So if you're coming into this earnings season thinking a lot of these companies are profiting and cashing in on the AI boom, that's not going to happen. Now, will we hear good things from companies like Nvidia, AMD? Maybe they come out there with their own guidance reset because they're seeing demand for some new AI chips they put out. Do we see a guidance reset from a Salesforce, which is now standing up various AI applications and instances? Maybe, but those will be not the norm.
Okay, that's fair.
Fair.